Coming up next on TWIFO, we break down the top futures options products for 2019. Look at some of the big movers and shakers for this week. Some surprises in there. Then we break down some interesting options action in the equities and energy and metals. Oh yeah, we take some of your questions too. And if that's not enough, I'm joined in the CME hot seat this week by Scott BAUER from Prosper Trading Academy. All that and more coming up next on TWIFO.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, a program where the name says it all. We break down the week that was and indeed still is on the futures options side of the fence. So maybe we'll talk some ag, some metals, some equities. You never know what the heck's going to make it. Energy, what's going to make it on the show every week. You got to tune in, check it out for yourself. My name is Mark Longo from theoptionsinsider.com, as well as, of course, on the ever-exciting The Options Insider Radio Network. You guys know how to get at us every Friday. Well, Friday. Used to be Fridays. Thursdays. Dating myself. Thursdays, 1:30 p.m. Central for the live version or after the fact on your device of choice. Make sure, however you listen, hit us up. Questions, comments, insights, pearls of wisdom. You guys are the little engine that keeps driving this show forward. My buddy, Mr. Sean Smith from FTSE Russell, heading off to the environs of NYC this week, so no in-studio appearance from him. We'll have a great guest, though, joining us in a little bit in the old CME hot seat. But before we get to that, we got some more numbers coming out. 2019 is in the record books. Thought we had most of the numbers, but CME continues to let slip out new nuggets here. And coming out here, we see the overall numbers for ADV, particularly from an international perspective. I know Sean's always talking about that with FTSE as well. The international growth is really where a lot of these groups are aiming going forward from 2020 and beyond. It looks like it was a pretty decent year for CME from that perspective. International ADV was 4.8 million contracts. That puts it up 10% from 2018. Surprise, surprise. Go figure which complexes were the most active. Yep, it was rates that was driving a lot of that paper. If you want to know which areas were the biggest, Europe, Middle East, and Africa, that was the lion's share. That's a big chunk. It's a big region. 3.6 million contracts, so that was up 7%. Asia Pacific hit 1 million contracts. That was up 20% from 2018. Latin America, kind of the laggard there, 147,000 contracts. That's still good percentage increase, up 48%. So interesting growth there. And, of course, if you're wondering, the products rates led the charge internationally as well, up 4% to 10.3 million contracts. That's a record. Metals also getting some international love, up 5% to 668,000 contracts. Speaking of the 2019 records, the numbers are out overall for options. Now, we touched on some of these in the past, but worth noting, when you just forget the futures stuff, we like futures, but this is an options show. Let's get to the options. 1 billion contracts trading in options on futures over there in CME land last year. It puts an ADV of about 4 million contracts a day. It's kind of funny. People still think of CME as a futures shop, but a lot of options changing hands over there these days. Hence this show. Let's see. Record rates for options, obviously ADV 2.76 million, and metals hitting about 78,500 contracts a day. 98 million contracts record open interest. That was back on June 13th. Of last year. And they also broke down the top 10 products of the year, which is kind of interesting for us. You can probably guess some of the top couple, but beyond that, it's kind of interesting. Let's break those down for you here as well. And top 10 over there in CME land on Globex from an options perspective. Number 10 are the beans. This is by ADV now. It's how they quote this. 53,700. Puts it actually down 29%. No surprise there. The trade war not exactly bullish for volume or for price action in beans out there this year, or I should say last year. Gold, 66,000 was the ADV. That's up 36%. So gold getting a nice little boost from all things trade war. Number 8, nat gas, 89,600. That's down actually 14%. That's kind of surprising given the turbulence we've seen in the nat gas market, particularly over the last few months, that the ADV would actually be down in 2019, but it was. Number 7, corn at about 125,000 contracts ADV. It puts it up 23%. From 2018. So the trade war, bit of a boon there, at least from a volume perspective for corn. Number 6, our old friend WTI at about 145,000 contracts. That one's actually off as well, off a decent chunk, 27%. So surprising decrease out there in WTI. We saw a lot of action out there, but still off from 2018. 2018 was a pretty active year, though, so probably a bit of a frame of reference issue there as well. Number 5, the old T-bond, 147,000 contracts. That's up 5%. Going to get a lot of rates in these top 5 here, listeners. Number 4, the 5-year note, 226,000 contracts a day. That's up 37%. That's big numbers out there for the 5-year note. Number 3, the good old E-mini. Breaking up the rates monotony here. E-mini S&P 500, almost just a tick under 600,000, 599,000. That one also off as well, off 21%. The 10-year, 679,000, up 2%. And number 1, you guessed it, Eurodollars, 1.68 million contracts a day, up 20% on that already ridiculous number. So quite the year out there in Eurodollars. Interesting stuff when you start breaking it down from an options perspective. Let's move to what's lighting it up here this week. Let's go to our movers and shakers for the week. Sean's not here, so I get to go dark side first, which is the way I like to go. Let's go to the bottom, our shakers, let's call them. They're not the movers, they're the shakers. They're the downside for the week. Number 5, heating oil. It's got a lot of energy on the dark side here, listeners. Spoiler alert. Number 5, heating oil, off 4.3%. Number 4, copper, off 4.7%. Number 3, good old WTI, off 5.2% on the week. Not a good week for WTI. Number 2, good old RBOB, off nearly 6%, 5.9%. And rounding out the dark side here, number 1 with a bullet to the downside, nat gas. It mitigated some of its losses, though. It was off over 8%. Now it's off a paltry, a mere 6.8%. Going on to the upside here, the light side. Again, this is net futures movement. This is no vol. This is no options volume, anything like that. Just straight up what the futures have done since the last time we gathered here together. Number 5, lean hogs, up 2.5%. Number 4, oats, up 3.4%. Not a name we talk about a lot, but not really a big option story either. So there you go. Number 3, corn, up 4.3%. That'll excite some of you out there. Number 2, class 3 milk. Once again, milk, just breaking into the top 5 like it's nothing. Up 5.5%. And number 1, you guessed it, it remains at the top yet again. Palladium, up 6.2%. Quite the year it has been out there for all things palladium. I mean, we talked about it before on the show with the various rolling blackouts that have been going on out there in South Africa and other levels, really kind of just driving up everything from a overall price perspective. Is it sustainable? That's a good question. So far, at least, it remains completely sustainable here. And show after show, week after week, we continue to see all things palladium just dominate in the tape here. All right, moving on now. We are going to be joined forthwith by our guest here. Since he hangs his hat in the equities land, let's start off there in a little bit of equities, looking at our old friend, the volatility of the S&P, a.k.a. VIX. It was right around a 13.5 coming into showtime. Puts it up a little over more than a half of a point, more than a handle from last show, about almost 1.5 handles from where it was last show. That puts it at about 13.5 to 13.65. And then we've got good old VVIX, which is the volatility of volatility, at about a 93.65, almost 94. That puts it up almost 4 handles from where it was at this time last show, almost 4.5 actually. So the volatility of volatility is something to watch. When it starts getting towards that 100 level, then it's something to pay attention to. Triple digits. RVX, a.k.a. the volatility of our old friend, the Russell 2000, hovering at about almost a 16, 15.8. That puts it up quite a bit from last show, up nearly 2 handles, about 1.8 handles from last show. That means that VIX RVX spread, so that spread between the Russell 2000 volatility and the S&P 500 volatility, widening out a little bit. It's still fairly tight. It's still around that 2-point level, but a little bit wider than it was. About 1.8 last show. Now it's about a 2.15. So that puts it slightly wider than what it was last show. And now I'm pleased to be joined by our guest holding down the CME hot seat this week. He is Scott BAUER from Prosper Trading Academy. Scott, welcome to the TWIFO program.
Good afternoon. How are you?
I am doing well. How are things in the land of Prosper Trading Academy?
Things are great here. I wish I would have had a little bit more of an opportunity to buy something today in the marketplace. It's just such a Teflon market. It seems, shrugs off every sell-off here. At one point here, we're gonna get a nice pop to the downside, but today didn't seem to be the day.
Yeah, today was not the day. I should mention, listeners, when we did our show about an hour ago, it was all in sell-off territory. Everything was in the red. The Dow was off about 0.5%, S&P about 1/3%. Most of them mitigated those losses now. NASDAQ and S&P actually in the green now, and Dow threatening it. So I guess you had your moment to buy the dip, and that was very short-lived. But before we get into that, Scott, as we were wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the derivative space, as well as what it is you guys do over there at Prosper Trading Academy.
Absolutely. Thank you. I have been professionally in this space since 1990. Got my foray into the markets on the floor of the CBOE, started trading on a badge in 1991, became a partner with BOTA Capital Management, built up a fairly sizable trading firm at the CBOE and most of the other options exchanges. I traded Coca-Cola options, Gap stores, and then went on to become the first and only market maker in the world, actually, for Amazon.com options when they were listed back in the late 90s. And from there went on and got hired by Goldman Sachs. I was a vice president in their equities division and ran their S&P 500 options operation at the CBOE. And have built up this company, Prosper Trading Academy, over the last few years, where I'm the CEO, and myself and a few other educators actually teach people how to trade live in the markets. We're trading alongside them. We take the same trades as them. We are not brokers. We are not registered representatives. We are educators, very experienced, professional traders teaching people how to make the most of this market.
Quite a few former BOTA guys floating around. We just had one on again about a week ago. The trading world is lousy with former BOTA guys, Scott.
We had a lot of people working for us.
Yeah, I never made it to BOTA myself. I was at Stafford and a few others along the way down in the days of the CBO. So you were there in the melee that was the multiple listing when they started adding new names like Dell and Yahoo to the CBO. You were down there for that fun?
I was, and that's why I said that I was the only market maker that traded Amazon, because when that was listed, as you just mentioned, that was prior to multiple listing. So, Amazon, Coca-Cola, IBM, those options were only listed at the CBOE. There were options that were only listed in New York and San Francisco and Philly. So I was literally the only market maker at the CBOE that traded Amazon options for about 3 months.
There you go. You got that feather in your cap, sir.
Exactly.
Stocks moved a little bit since then.
just a little bit.
Just a wee bit. So what is the hot thing these days? Obviously, you guys sound like you're primarily equity options focused over there in Prosper Land. What is the hot thing that is lighting up the tape over there with your students and your mentees at Prosper right now?
Yeah, so equity options, and we also trade stocks, a lot of penny stocks as well. And the cannabis sector actually has been moving again. Not necessarily that they're penny stocks now, but we saw the big run a year ago, and they all sold off, and the market kind of died down, and the cannabis sector is getting a lot of volume, a lot of interest again here. On the option side, though, on the equity, for other equities, this is a great time for us. Earnings cycle, earnings season is a really busy time for us. We trade a lot of volatility. My expertise is actually trading volatility. So, especially around earnings time, you get a lot of opportunity to arbitrage options against one another because of implied volatility. So this is a real good, real busy time for us. We like to keep things as simple as possible. We like to teach our students to trade as simply as possible. Keep it simple, stupid, that old adage there. Don't necessarily have to get into very structured types of strategies. Keep things on the simple side, use technical analysis, fundamental analysis. But like I said, this is a great time for us earnings season right now.
Is it primarily single names, or do you play out in the indices as well?
Primarily single names, though. In full disclosure here, we actually did do something at SPY yesterday. We do have a VIX position on as well. So we will look at a more macro trade like that. But I'd say 90% of the time it's individual names.
I just asked because we're looking right now here at the... By the way, listeners, you guys, as always, can follow along with the show, CMEGroup.com/TWIFO. I figured, Scott, since you're kicking it off in the equities realm, we'd kick things off in equities land here as well. A lot of products we want to get on the show today, as you might imagine. A lot of things popping off. Let's head on out to the E-mini. We don't get a chance to talk the E-mini too often here on the show, even though it was lighting it up. Like we said last year, it was the number 3 overall options product at CME with just a tick under 600,000 contracts a day. And coming into today's show, we're seeing the E-mini, the S&P, I should say, off slightly on the week. Not much, about a little more than 0.1%. The big contract, once again, right around 3,300 listeners, about 3,320, so not surprisingly, even number puts are where the action is. 3,300 puts doing about almost 23,000 contracts. That's your number one trade out here this week from an overall options perspective. I hate to parse skew in a contract that has 1 day to go. So let's roll on out here a little bit. Maybe let's go out to February. It has a much more meaningful, from a skew perspective at least, about 29 days to go. It also did about 12% of the paper. 24% coming in that 1 day to go contract, which just shows how much in the equity land people still love those weeklies. And we're looking at skew out here. Vol, obviously, actually net on the week, up a little bit net on the week, which is kind of interesting. We saw, obviously, a bit of a sell-off, and still some of that vol has trickled in and hasn't really mitigated, even though the sell-off has mitigated somewhat today. Vol's up about a point from where it was this time last week. And looking at the skew out here last week, it looks pretty similar. A little bit of change on the call side. Put side, not so much. The puts were about 25.9% rich to the at the money this week. Exactly the same. They haven't changed in that Feb contract. The calls have come in a little bit. They've gotten bid up a little bit. They were 16.2% cheap to the at the money this week. They're about 14.2%, a little bit 2% richer here this week. That's kind of our biggest change out here. And since our buddy Sean couldn't be here, let me look really quickly out here in his stead what's going on out there in the Russell 2000 out there today. If people like themselves a little bit longer term puts out there in Russell land, that seems to be the case again right now. We're at about a 1690, so threatening that 1700 level out there in the Russell right now, listeners. And it looks like it's the March 1485 puts that are dominating the tape. So a little bit farther out and substantially out of the money, about 200 handle out of the money puts are kind of where the action is out there these days. So, Scott, it sounds like for a lot of your audience, a lot of your users over there at Prosper, are they concerned also about valuation levels? Maybe they're looking for hedging at these levels, or is it all about maybe trying to come in and scalp around some of the earnings trades?
Yeah, so on a more macro level, it's definitely hedging, and thus the positions we've taken, in SPY and in some of the other products. But otherwise, it's really broken down more around earnings or some other just positions that we take on a more technical or fundamental basis. One thing I want to point out to you, going back to what you were talking about with volume, S&P E-mini option volume. Yesterday was a fairly busy day at CME, almost 500,000 E-mini option contracts traded. And on Tuesday, there was last Friday. So going into the long weekend, and I think this is really important to note. Last Friday, there were only about 57% of all volume traded on the put side for E-mini options at CME. Typically, that's closer to 70%. So going into the long weekend, there was a big bias, at least from the order flow, the paper flow, on the call side. Now I'm looking at the stats from yesterday, and it's back up a little bit more towards that normal range that it should be. Yesterday, 67% of all E-mini options traded at CME were on the put side, total of about 500,000 contracts that traded. So, when you ask me what my students, what our members are looking at here, yeah, they're definitely looking to hedge what many see as an overbought condition, but also looking to take advantage on a day-to-day basis of a pop or a drop in an individual, stock that we're looking at.
Interesting. Don't you just see that kind of paper heading into a long weekend? Usually everyone's getting the heck out of Dodge and trying to get rid of some of their decay for the weekend. But it sounds like people have learned there is some literal weekend risk these days. So maybe having some contracts in your back pocket for that isn't the worst thing. Scott, I'd love to talk equities the whole show. We have to keep on rolling with some other products as well. So, but you're our guest. I'll give you pride of place. You get to choose where we hang our hats next. You want to go into energy land, maybe some WTI? You want to go more into metals land, talk about some gold and other shiny stuff?
Let's talk about oil first. Let's talk, and then maybe we can talk about some metals, because a move today that we saw in oil was pretty big. And obviously there's a lot of trepidation, a lot of fear out there for what's going on with this coronavirus. What's going on? How is that going to sap any sort of demand coming out of China? This, that, and the other. But this drop that we've seen in West Texas, going from where it was 60 plus just a week or so ago, now to, basically 55 or sub 55. That was a massive, massive drop. And then we get the data out earlier today showing, a bit of a drawdown on any other, let's say, normal part of the cycle or announcement like that. We probably would have seen a significant rally. But I think that the overriding fear, because of the risk to, this virus, has really kept that rally that we ordinarily would have seen at bay. And that's why crude is still really big time under pressure.
Yeah, it has been a fascinating week of shifting narratives out here in crude land. Coming into Showtime listeners, we're seeing WTI right around the 55 handle, about 55.66. That puts it off about 3 handles or about 5% from where it was this time last week. And like I said, kicking off the week, we saw these concerns about some supply coming off the table from Libya. That, of course, looked a little bit bullish, but then we had this immediate follow-up of this kind of 1-2 punch on the supply side and on the demand side. First off, as Scott mentioned, these concerns over weakening demand as a result of this coronavirus, huge swaths of China now being effectively quarantined. Of course, it's going to impact travel and usage of crude for things like flights and everything else. So a lot of the demand side of crude potentially is going to be impacted. People looking back to when SARS was hitting the region in the early 2000s and what impact that had on crude, and it was not good. So some people looking for that. That's weakening potentially demand, on top of which we have the folks over there at the IEA hanging out in Davos and saying they see a massive glut, or I think as they termed it, an abundance of energy supply in terms of oil and gas. So that threat of a glut, that 1-2 punch, weakening demand, and the supply glut really seemed to mitigate any near-term bullish impact we had from the concerns out of Libya. And that's been the case as we've said before, many times on this show, we said it before when Russell was on, we said it when Eric and Blue from CME were on, and everyone else. It's continued fascination with these very short-lived blips out there in CME land. In fact, Blue and Eric have been at it again over there in CME land. I think they're taking what we talked about on the last show and putting it together into a new paper. It's called Is Mideast Risk Premium Too Low out there in Crude right now? Of course, you can find it over there at CME land. And they pretty much talk about what we talked about last time they were on, about how the blips we saw, and they were blips. They weren't rallies. They were blips from the Saudi attack, which wiped out a substantial portion of the global crude supply. Market shrugged that off. We saw the attack on the Iranian general. The market shrugged that. Things that normally would have caused huge surges in price levels out there were very much short-term blips. And they kind of compare in this paper to looking at what's going on. Obviously, the U.S. has kind of trumped the Middle East in terms of the global producer, and it's a very different frame of reference when you're talking shale producers than there are in the Middle East. Shale producers, much more short-term in nature. The lifespan of those wells are fairly short term. They only last for about maybe 2 years on the outside versus a longer term deep well that could last decades. So they're much more aggressive in hedging, which I think is an interesting point. And they look at the WTI futures curve as a way to kind of price that out. Seeing a lot of these producers, whenever there's any pop, these producers are very aggressive in selling futures and getting short to try to lock in some of these price levels. So that also has a mitigating effect out there on all things WTI, or I should say, on all things crude. So check it out. Also, inventories, it's huge inventories. They point that out as well. That's weighing on any sort of big moves you might have seen as getting offset by the enormous inventories we have. So it's a great paper. I encourage you guys to check it out. It's called Is Mideast Risk Premium Too Low? You can draw your own conclusions out there. We've talked about that many times here on the show. Let's see what we're looking at this week. Again, CMEGROUP.com/TWIFO is the place to go to play the home game. And coming into showtime here, we're seeing, like I said, crude right around 55. And it's the double puts, the 55 puts that are lighting it up out here in March. 20,200 is the big print out here this week. And they went up, looks like the lion's share going up out here actually today. 9,500 going up today, 7,000 yesterday, and about 3,000 on Tuesday. Obviously, no paper going up here on Monday. So not surprisingly, people may be a bit concerned or maybe writing down there a little bit as well. Either way, we're threatening that 55 strike again, and those double puts are really where the action is. Let's go out a little bit to see if we see any funkier paper a little bit farther out. 70 calls, getting a little bit of love out here in Dees to the tune of about 3,000 going up here this week. And if the double level, 55 level is not enough for you to the downside, someone lighten up 700 of the Dees 21, 35 puts. So 35 level. That'd be an impressive level to retreat back down to if that was the case. Vol actually up a bit this week, up substantially actually, up about 5 handles in this March contract, which did about 50% of the paper here this week. Let's look at the skew here really quickly. The puts were about 11.5% rich, so the bid was to the puts, and that continues this week. It's actually a little bit more. It's about 12% rich to the puts. And on the call side, we're seeing the calls were about 8% cheap to the at-the-money this week. They're about 8.3. So calls getting a little bit cheaper, puts getting a little bit bid. Not surprising as we're sliding down there the skew. Do you guys trade a lot of crude over there in Prosper Land, or maybe are your students perhaps looking at the ETFs instead, like the XLE? You know, are they trading a lot of energy in Prosper Land, Scott?
So, you know, we actually have a position on right now in ERY. So ERY is a short. It's a 3-time short ETF. Okay, so it's an inverse. So we put this on when crude was trading about 61. We actually hedged some of that, and we're letting the rest of it ride right now. So that has been looking pretty good. But I will tell you that sub 55 here, we will be covering. Absolutely, we will be covering here. If you look at this range that crude is traded in and take into consideration all of the risk events that have happened over the last 6 to 9 months, you mentioned the Saudi attack and what's going on in Libya. That range has still really held in West Texas, really from about 54 to 62 on the extremes. And we've been trading that. Anybody that's traded that or traded just inside of that range, you've done pretty well. And I'm a big believer in those ranges, especially when they're as defined as they are. I'm also a big believer in bulls and bears prosper, pigs go to the slaughter. So of hedging my positions and not going for the home run, not going for the grand slam, especially in this marketplace, as you know. You got to keep positions really close to the vest here because, look at a day like today where everything this morning seemed like, we could maybe have gotten one of those down 2 or 3% days, and here we are unchanged. And it just kind of happens at the drop of a hat. So you have to keep positions really close to the vest right now.
Yeah, I think that's probably a good level you probably want to hedge at or take it off at the 55 level because we've seen interesting movements around that level in the past. Speaking of interesting movements, we'll head on out to the shiny stuff as well. That one's been making some headlines of late. I know you guys love to sling yourself some gold. We're seeing gold futures hitting their highest level in just about a couple of weeks here. Of course, gold likes itself a little bit of the threat of a global pandemic, and that's exactly what's boosting gold. Coming into showtime here, we're seeing the COMEX gold at about 1562, so still shy of that 1600 level we blew through not too long ago when all that drama was popping off about Iran, but still up a bit on the week, up slightly, up about, a little, not quite 0.2%. So getting a bit of a lift. It was up more, kind of giving some of that back, as you said, some of the broad concerns being played out in the marketplace have eased somewhat. Looking out here, seeing the vol, which gold vol has already been kind of in the doldrums for the better part of a year. We had a few moments of spikes out there, but for the most part, it's been kind of paltry, and that's pretty much the case again this week. Whatever meager premium it had built up, it is giving back this week, off about a point and change, pretty much across the board, particularly in these nearer term contracts, really getting annihilated from a vol perspective. So I guess a little juice they put in there as a result of this coronavirus is getting squeezed out here. And now the big contract out here this week was the Feb contract, doing about 22% of the paper, and the big trade out here, the big print, the big option du jour here looks like 15.5 puts, so slightly out of the money puts going up in Feb to the tune of about 7,500 contracts. Most of that actually coming today, about 4,400 going up today. So obviously we don't have OI numbers on that. Not surprising. We've seen a lot of developments out here today on the broad macro and indeed on the broad equity front. That's going to drive a lot of action in gold. It's not surprising we're seeing today being the big action. Let's look a little bit farther down the chain here. Actually, no, I take that back. It's not the 15.5 puts. Those are number two. It's the 1,600 calls that were going up out here in April that were actually leading the dance here this week. That's why I have to hit select all, listeners. When you're looking at all these things, you can see every month and every strike. It's a lot of data. I know it can be overwhelming to some folks, but for a show like this, it's indispensable. All right, 1,600 calls, doing about 9,500 contracts today, once again, being the big day. 1,600 calls going up out here in April. That's somewhat surprising. Not the kind of paper I would have expected given today's price action out here and indeed this week's price action out here in gold. Maybe some folks thinking about we're going to retrace to that level. Maybe they're overriding. We don't have the OI numbers on today's paper, obviously, so we'll have to wait and see on that. Doesn't look like there's any 1x2s or anything else going up like there usually is out here in funky gold land, but we'll keep an eye. Actually, are some weird strikes lighting it up, though. 2,200 of the 1,900s also going up in April. 17 halves going up 1,800 times. So maybe there are some funky verticals driving some of this as well. Either way, we know to watch a lot of the crazy gold upside out here and keep an eye on all that fun stuff. Scott, when you're not slinging your inverses in crude and your individual equities, any of your students, your mentees playing gold, or maybe some of the GLDs or SLVs out there?
I've had a lot of interest actually in SLV from our students. It's been such a laggard to gold, and you look at the gold silver ratio over time, and it's just keeps expanding. It keeps expanding, and at some point it's got you think it's got to come back into line. So I've actually had a lot of people ask me, "What do you think of silver here?" Not really so much gold, because everybody still thinks that when the what hits the fan, gold is going up. It's that that risk off sentiment, so everybody's going to gold. But I've seen a lot of people here really interested in silver, and the one to me that's kind of lighting up the tape a bit and it doesn't get as much headline is copper. Okay, if you look at copper here, and we know how closely related copper is to home builders and in general here, and with the home builders doing so well and just that whole space, I'm surprised that we have not seen a rally back here. This thing has sold off just over the last couple weeks. and especially over the last few days, a lot of that could be because of what's going on in China here. I'm really surprised, though, that we haven't seen a bigger rally back towards those highs that we saw just, about a week ago or so.
Yeah, copper's been an interesting one. We touched on it a number of times here because it has had big price movements. It wasn't a huge option story. That's why it was kind of hard to cover on this show. But that narrative has changed. Obviously, the numbers still pale in comparison to a gold or WTI, but they're starting to grow. It's becoming much more of an option story. And that story is also getting maybe a little bit divorced from Chinese demand, which was always the big and only the sole driver for all things copper. It's kind of been interesting. It's becoming a more nuanced product. So I think we're going to see it more on our radar here going forward on TWIFO. Speaking of going forward on TWIFO, you guys have been hitting us up like crazy. So we got to squeeze a few of you in the show before we wrap up with a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, let's see how many of you folks we can squeeze here onto the show today. And it looks like you guys liked when we were chatting, Nick and Sean and I chatting about Eurodollars last week. You guys liked that. A lot of you chiming in about that. Well, we got a few of you here. Albert Marquez says, you were covering your short put spreads from put fly strips out there in the Eurodollars. Started buying earlier this week and selling them against the 85 calls. Interesting. To see what you guys have going on out there. He also said he's got more put spreads going on. He's been writing in put fly strips. Oh, he's talking about a put fly strip buyer who's actually out there taking off the bottom spread. So he's talking about some of the paper flow we were discussing last week on the show. He says it's a put fly strip buyer. Total position in the strip is approximately 150,000 contracts. Almost done. That puts Eurodollars in perspective. The type of numbers that they're throwing around out there. We're talking about a few thousand potentially in copper, and Eurodollars doing 150,000 contracts in one strip. It's just a different beast, and he included a nice graph with all the months and charts, a nice table here. So thank you for that, Albert. Russell, our buddy Russell from Tab Group, also liking it, that we were talking about Eurodollars last week. He said, finally, it only takes an ADV of 1 million plus to get some love on the show. Hey, it's not my fault. Sean never wants to talk about rates. I got to twist his arm to get him to talk about rates. I mean, if it was up to me, I'd be nonstop rates all the time. And I am, of course, joking there. All right, next up, let's see how many more we can squeeze on to you here. Nexter. There we go. Wants to know, do you guys offer webinars on futures options trading? Well, we do not. We are a content and media company, so we provide shows. We do a lot of shows that are aimed at that. We don't do any webinars. But Scott, this might be something that's up your alley over there. Do you guys do any, I'm sure you guys do webinars. Do you do any around futures options, sir?
Most of ours are based around the equity markets. In fact, we have one today at 3:30. I know this was not prompted. This is not a plug, but it's really based around the equity markets and not so much on the futures side.
There you go. If they want to check that out for themselves, where should they go, Scott?
They can go to prospertrading.com, and there will be a link up there to register for today's webinar.
There we go. All right, we got time for, let's see, one more here before we roll out. This comes from Jan. Jan wants to know, what was the dairy volatility product you mentioned on the show, please? I love you. You're so polite, please. Well, it wasn't quite a product. It was an index, and it was the milkshake index. And it was from our friends over there at T3, where they're actually trying to model and analyze dairy volatility. As you said, one of my surprises of last year was just how active and volatile the dairy complex has been. Look, Class 3 milk on the top 5 movers and shakers this week. So it's moving quite a bit. It's not a product you can trade, but it is something you could watch. It's called the Milkshake Index. You head on over to T3. It's not going to have, I don't believe, any U.S. dairy product. I think it's mostly for that Australia kind of Anzac region over there. But that's at least as far as I know, the only dairy volatility product in existence. You can go cut your teeth there, and as we're seeing these other dairy products and complexes start to get a little bit more volume behind them, then maybe we'll see something like that pop up here in the U.S. in perhaps a little bit. All right, unfortunately, listeners, that music means we've come to the end of another excellent sojourn through the world of futures options. But before we go, Scott, you mentioned that webinar. If folks want to check out what you guys have cooking, or maybe you want to leave them with a little bit of a hint, a little bit of a tease of what's coming down the pike from you guys over there in the land of Prosper. Now is the time, sir. The floor is yours.
Awesome. I appreciate that. Yeah, we're gonna talk about some great strategies to take advantage of during high volatility times like this during earnings, and also a proprietary signal that we have developed here called our zone strategy, which is a very high momentum type of option strategy. And myself and two of our other instructors here are going to be diving into that, and we really look forward to everybody hopefully joining.
There you go. Check them out. Prosper Trading Academy is the place to go to learn more. And on behalf of Scott and our buddy Sean, who couldn't be here, of course, FTSE Russell, FTSE Russell.com, the place to go. Give him a follow on the old Twitters while you're at it. All that great data about buy rights and premium harvesting in the Russell 2000. They have it all there and a lot more. And, of course, our friends over there at CME as well, CMEGroup.com/TWIFO, the place to go to kick the tires and light the fires in between episodes of TWIFO. And, of course, we'll be back tomorrow, 1 p.m. Central. We're talking some volatility, kick it all off again on Monday with option block and everything else, and then right back again on Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.